would like, if I may, to take you on a strange journey.
Hello, everyone, and welcome to another edition of Real Estate Realities with the Rebel Broker. My name's Robert Whitelaw, and I am the Rebel Broker. Licensed real estate broker in the state of California, member of the National Association of Realtors. But please, don't hold that against me. Welcome to the day after what probably was an over-the-top sensationalistic title for a show. Relating to the real estate market being doomed. Is that what it means? I'd actually love to hear back from you on what you folks think about that data. I've got another little nudge on that. That'll just be a quick little blurb we'll hit today in just a second, so stay around for that. If you'd like to get in contact with me, share your thoughts, your insights, your observations, suggestions, anything at all, head on over to therebelbroker.com. From there, click on Contact. You'll be taken immediately to a screen where you can send along your thoughts, and I would be happy to look at them. In addition, if you'd like to help the show out, once you get to that front page at therebelbroker.com, go to the very top, click the big red button that says Take the Survey to support the show. Take the survey, use the same email address both times you're asked, answer the handful of questions, and in addition to helping the show, you will be putting yourself in for a drawing to win a $50 Amazon gift card. We've already given it out to 5 lucky winners. That is a grand total of $250. We've been doing it at the beginning of each month, so you can get your name in there for winning in March. We've already picked February. Congratulations to past winners. Good luck to those who enter to win now. Yesterday's show. I think there's a lot in there to worry about. And when I think about it, I'm not sure it's a sensationalistic title. If you're looking at all these numbers, there's an awful lot of reason to be concerned. Follow-up story that I wanted to share with everyone. And again, of course, one thing I encourage you to do is think through this stuff yourself. Go check out the articles. That's one reason why I go to the trouble of including links to the stories that I talk about or that sort of fuel my rants on these various things. One came out titled Household Debt to Hit New Record in 2017. It's really basically just riffing off of the Federal Bank of New York report that we talked about yesterday. And yesterday's show has a link to that. So feel free to check that out. But there was an interesting comment made here that I thought is being shared in the spirit of offering comfort, but really just plays into the scenario that I think we all should be worried about. So here we go. Now, they make sure to note, as we did, mortgages make up most of the total household debt. Student loans now make up 10%, auto loans make up 9%, and credit cards make up 6%. And we talked about how those numbers had grown. And we've also talked about in past weeks how indebtedness in general has gone up, how there was a little boost in household incomes for one segment of time within the last 6 months, but that spending had outstripped it, had gone beyond it. So it was a net loss to folks in that situation. The sentence that kind of grabbed my eye was, this rising debt shows that banks are opening the credit box and extending more credit to households. And that's very true. But then the very next paragraph kind of gives us some insight into a direct relationship with real estate and absolutely supports the idea that we are simply pushing our lending strategies towards folks that are at a higher risk. Quote, the most recent origination insight report from Ellie Mae shows the average FICO score for home buyers dropped in December by 7 points. So regardless of whether what you want to argue about in terms of policy A, policy B, whatever it does, whatever it doesn't do, if you look at what we've covered here in terms of what's the goal of these things, and that is to broaden the accessibility to lending funds for folks who are less qualified to borrow them, that is what is happening. Now, one thing they do point out here is one major difference between 2016 and 2008 levels, fewer delinquencies. Last year's report showed 4.8% of debts were delinquent or late compared to 8.5% of total households in 2008. Yes, but we all know that the numbers that we are talking about now, the trends we're seeing that concern us are more on par with the numbers that concerned us in 2005, 2006, right? And of course, that delinquency number shot up in 2008. So I wouldn't take a whole lot of comfort from the fact that 4%, 4.8, almost 5% of debts were delinquent or late. I think I'd just say we may be on our way to that. And what is particularly creepy about that is that means we're less than 4 percentage points away from being as bad as it was in 2008. So there you go. There's that. Just something else I wanted to throw on there, an interesting observation. I thought it was particularly interesting that there's actually been an average reduction in the credit score of folks who were borrowing in that quarter. Something to think about. And it at the very least, it offers a little bit more support for understanding exactly who these policies are aimed at and how they're aimed at the absolute wrong people. It needs to be aimed at builders building more houses, not buyers buying more houses. Because all that's going to do is cause prices to artificially rise, and then we're going to be in deep trouble again. So just another little cherry to put on the top of that unpleasantness. Let's just call it that. Today, I thought it would be interesting to discuss the drawbacks of the lease option. Why? Because I'm a fan of the lease option. And I'm always interested in hearing opposing viewpoints or being exposed to ideas that challenge or prove themselves to be a challenge to that process. For those of you who don't know what a lease option is, it is basically you writing out exactly the conditions under which you will buy a property, but then creating it as a lease, meaning you don't put any money down right now, or maybe you do put some money down. It depends on how you create the deal. Most of those deals are going to require some amount of money down. In many cases, think of it as your rental deposit, right? That you have to put down. You have to have first and last month's rent, that kind of thing. Oftentimes, that's the number that ends up being very close to what you would put down as first and last month's rent. And then you pay a certain amount of rent for a predetermined amount of time. And anytime during that time, up until the end of the lease option, you can exercise your option to purchase the property based on the terms and conditions set forth in the offer. I hope that doesn't confuse anybody. That's kind of a really fast, short, dirty version of what it is. But it's basically renting a property until you can buy the property. If you decide not to exercise the option, let's say the value of the property drops through the floor, then you wouldn't have to execute. You could step away. You would lose any benefits. You would lose your deposit. And if you had written the contract so that some portion of your rent was going towards the purchase of the property, which is the way I've written these things in the past, then you'd lose that money as well. You would just simply say, all right, I refuse to exercise my option and I'm out. And you may be okay. It may be a situation where things worked out well. Typically, when I'm doing a lease option, the majority of the time, my folks are actually getting a little bit below market in terms of what rent goes for anyway. There are cases where that cannot be the case. I have had pushback in past years where a seller has wanted a little bit more because they knew that that some amount of that rent was being allocated towards the purchase price. Usually the net is if you were to exercise it, you're still okay because you're ending up, when you take that, say $500 out of the rent that you're paying to go towards the purchase price, while you may have been $200 over, now you're $300 under if you exercise the option. If you don't exercise the option, then right, you've been paying rent at a slightly higher rate than you should have been. Now, I like these things, and it's up to you to decide whether the terms and conditions make sense to you. But there are some interesting things pointed out by the folks at BiggerPockets that I thought would be good to go over, and maybe even discuss, well, how do you create a safety net for yourself to protect yourself from these particular potential issues? Because in most cases you can. They bring a couple of things that I think are far more corner cases, but you know what? No one likes to get stuck in a corner. So that doesn't mean they can't happen. It just means that they very rarely do. So I thought it would be good for us to go ahead, jump in, cover these topics, and see if we can't get just a little bit smarter about lease options. Now, they had 3 risks and drawbacks of real estate lease options. As I mentioned, there will be a link to this article in the description for today's show, in the show notes, which you can find at therebelbroker.com. Oh, let me also give you the update on rebelbroker.com. So I have now made it quite a bit easier to find old shows. You now have 2 different ways to find them. One is the player. Now that tends to be at the tippy top of the show. The current show, the latest show is always number 1. And then off to the right, it lists a bunch of shows. And you can search within that little widget just for titles of shows. So all it will search is the title of shows, not the show notes, so that you can go through all the shows it's listing there. That's based off of the RSS feed. So it's going to be current up to, I think, the last 50 shows, something in that ballpark. However, I have also at therebelbroker.com added a menu item to the right of the show notes, the basic show blurbs. And from there, you can do a search, which will search not only show notes, not only the show title, but also show notes. So if I had someone, for instance, ask me a couple of days ago about how to track down my show relating to the credit changes that were happening. So now if you go in there and you do a search on credit, you're going to find 2 different shows I've done on that topic, and you'll be able to drill down to the show notes so you can find the articles that I used when I discussed those. So that was one thing. The other thing I did was also added a recent shows widget there that will, I think, show you the last 30 shows. It's either the last 25 or the last 30 shows, so that instead of having to go looking through the archives manually, it just gives you one line that shows the name of the show and the date of the show. So you can kind of look down that list and go back quite a few weeks and spot a show that looks interesting to you. So it should make it a little bit easier I'm trying to improve the ability to sort of just randomly scroll through shows to figure out if you want to check out some older stuff. So feel free to check that out. Take advantage of it if it's something that sounds good to you. Okay. So let's go ahead and jump in. I think what we'll do is we'll take a quick break right here. And then when we come back, we will talk about the due on sale clause and what that might mean for you if you're interested in doing a lease option. So don't go away. We're going to be right back. Are you ready to jump in and start your search for your first investment property? Maybe you've decided that it's time to own your own home, or maybe you're ready to sell your home and move on to something new. No matter what your goal is, the Rebel Broker can help. That's right. Aside from hosting this show, I am also the owner broker of Whitelaw & Sons Real Estate Services right here in Silicon Valley. With over 25 years experience serving Silicon Valley, Morgan Hill, San Martin, and Gilroy, I or one of my great agents can help you achieve your goals in real estate. So if you're ready to look into taking that next step towards achieving your real estate goals, point your browser at www.soldbyrobert.com. That's www.soldbyrobert.com and get in touch. Let me show you how I will earn your business and your respect. Again, that's www.soldbyrobert.com, or you can call me at 408-852-0525. California Bureau of Real Estate ID 00984-909. Welcome back, everyone. We are talking about one of my favorite things, lease options. Lease options are super powerful. You're not going to get sellers to agree to these a huge number of times. But I'll tell you what, it's a great tool for someone who maybe doesn't have the money now to buy a property, but really feels strongly that they want to lock in a transaction right now, lock in a purchase price right now, lock in terms right now. Because once this thing gets signed and the lease option is in effect, those terms can't get changed unless both parties agree. And the seller can't simply decide not to. I mean, there could be extenuating circumstances, there can be other things. But if then they cancel it, you get all your stuff back, right? So I encourage folks who are currently renting, stay in contact with your landlord. If history has taught us anything, is that landlords, many of them, change their mind on whether or not they want to continue to own a property. Maybe you've established really good rapport with your landlord. Don't be quiet and shy about letting them know that you would like to buy the home you're currently renting. If you guys have had a great relationship, there is a huge chance that those folks might be open to that. Maybe not now. Maybe they'll call you again or get back to you after a year or two, after considering the possibility of doing a lease option with you, where you could potentially get the home at a really good price, have your rent count towards your down payment, and be able to lock in those prices now. And if you're in a market where you think over the next year, 2 year, 3 years, those prices are going to go up, being able to lock that price in now could be a very sexy option for you. So it's something I always encourage folks to do when there are renters who are currently renting, aren't ready to buy right now, but would love to be able to at least get the ball rolling and move them in that direction. Another thing I think is valuable for lease option is even just first-time buyers who are out there who have a down payment, but who just want something creative. I've let everyone know I'm in the process of doing a move, right? And once I get this home sold, I am going to purchase another home. But I find myself in a situation where I think I could get a much better deal if I negotiated something now, froze the price, and then potentially moved into it in the summer months or a little bit later in the year. So anytime I looked at a house that fit my bill and it was vacant, I suggested a lease option to the seller to see if they'd go for that. And the fact that I'd have something as short as a year for my lease option is very sexy. So now, in full disclosure, nobody has accepted. It's not like I'm doing dozens of these things. On 2 separate occasions, I found a property that would work for me that was vacant, and I offered them a lease option with the idea being I'd move out of my house while I continue to do the remodeling, get the place sold, and then I've already got a place set up. I've already got a new home lined up, and I can exercise that option anytime I like. So it's something you can use as a tool. It's a tough one to sell to many sellers. You are probably going to want to have a real estate agent working with you that really knows the ins and outs of a lease option, is very comfortable with a lease option, and can speak to you passionately about them enough that you think if they could get hold of the seller, they are going to show that same level of passion and really sell this as an option. The reality is it can absolutely be a win-win, particularly, and I think what you'll find, my market's a little bit tougher because I find that sellers are far more willing to entertain a lease option when they've been forced to make the monthly payments on a vacant home for like 5 months. If I can get to a home that's been on the market for 3, 4, 5 months, I find that sellers are far more willing to entertain that as an option. So just kind of put it in your back pocket. Maybe do a search for lease option on my past shows. I think I did a show dedicated just to lease options. It's probably a little bit more than a year old now, but check that out. It should still be there on the site for you to download or consume however you like. All right, so let's jump in with the due on sale clause. Now, I could read to you a due on sale clause. This is not something that you see in your offer. This is something you see in your loan documents. And what it is basically about is the bank saying as soon as you sell this property, your loan is due. You owe them money. And there's a very interesting interpretation of this. And let me just read directly from the folks at BiggerPockets. This clause, the due on sale clause, declares that the mortgage holder, the lender, has the legal right to demand to be paid back in full if the property is sold. If this happens and the borrower cannot pay back the entire loan in full, the lender could foreclose and reclaim the property. Okay. However, you can say, well, that is fine because the home has not been sold. It's just a lease with an option to purchase at a future date. While that's true, some people worry that a lease option could entice, again, I'm quoting, could entice a bank to call the note due based on the due on sale clause. In the lender's mind, they may argue that although the legal title was not transferred with the lease option, equitable interest in the property has been transferred. And this is all of this, I think, is an arguable thing. The point where we're at now, I think, is absolutely arguable. You'd want to talk to a lawyer. I'm not a lawyer, and I've never been in a situation where a lease option led to this concern, primarily because I don't think a lender ever discovered it. You'd have to notify the lender that this is happening in order for this to go anywhere. So maybe that's why. However, you want to make sure of something and this is something that's important because it's something you don't have control of. It's something your seller has control of. And that is, many due on sale clauses specifically note lease options as a condition for the due on sale to be exercised. In which case, again, I'm quoting, it's pretty black and white. If that's what the document says, if that's what the loan says, then this absolutely is something you need to worry about. Now, I have a loan. I've looked at my loan documents. I have not seen anything relating to in the due on sale clause stating that a lease option can trigger it. So I don't know. The loan documents I pulled up were actually from my previous loan, not my latest loan. So my loan's with a different company this time. Maybe theirs does, but it's something that you'll want to know as a seller. So how worried should you be about this? Well, the author of this article, who has apparently done quite a few of these, has never heard of it ever being an issue. I've never heard of it being an issue. Another person who was a big fan of lease options was my grandfather, who was also a real estate broker, and he never had a problem. So what are your odds of this causing a problem? Apparently pretty small. And my guess would be simply because the bottom line is in order for the bank to even make the claim, some sort of wheels would have to be turning to engage the transfer of ownership. So there's that. Just something to keep in mind. But the possibility does exist, no matter how remote. So I think it's just responsible to be aware of it. Okay. Let's see. Further things that they want to mention are concerns relating to the due on sale clause. Without notifying the bank, you are breaching an ethical and possibly even breaking mortgage law. So what can you do to prevent this kind of thing from happening? The main way is to have a great deal. If there's a ton of equity in the deal, chances are good that you could sell quickly or try to work something out, or simply don't do a deal that involves a due on sale clause. Again, I think this is about being armed with the knowledge. So if you're someone who wants to do this transaction as a buyer, you really need to make sure that your seller checks to see if there's a due on sale clause that relates specifically to lease options. If there's no mention of lease options in the due on sale clause, then you don't have anything to worry about. All right, number 2, major repairs the owner can't cover. Now, another big problem that they're pointing out is that if you're the lessor in a lease option scenario and you are renting out a property to tenants, repair problems could come up, right? Because you're not in the home. You could require the tenant to cover repairs under a certain amount, and in theory, this arrangement is great. However, certain issues could come up that you need to be aware of. What if a large repair is needed that your tenant can't afford? So in other words, you're in a lease option. So this is looking at it from the other side. This is looking at it from the seller side. What if a furnace goes out? Who's going to pay for that? Now, your contract with the owner will spell out exactly who's responsible, and you could take legal action if absolutely necessary. So it just introduces the idea of absolute clarity needs to be established on who's responsible for what expenses. This is usually not something that's covered in a standard document for this. This may be an addendum that you need to add on. But in these scenarios, I think it's exceptionally smart to figure it out. And in cases in the past, when I've written things like this up, I've said anything under X amount will be covered by the tenant, and anything over X amount will either be split between the two parties, or it'll be covered exclusively by the seller, or by the owner, the homeowner, the landlord. There are expectations, because the reality is, if this is a landlord scenario, they already have been supposedly putting money aside to deal with different systems needing repair or replacement within their rental property. So it's a natural part of the landlord process. And it's all going to come down to the agreement that you have up front. And let me just stress that just like you make your money when you buy a house, you create a smooth transaction when you anticipate as much as you can, or set up the guidelines as much as possible that will make understanding who pays what or does what absolutely clear. And I think that's potentially one of the things that could cause the most damage to a lease option. Let's see. You pay for the other thing to do, I think, which is I think a very good idea. Something I do on every deal I'm involved in here in California is to pay for a home warranty on the property, or have the tenants pay for one at the start of the lease option. That is an awesome way to go. They can cover all major maintenance problems in the home, and these policies tend to be less than $500. And they can absolutely save your life when it comes to a major component blowing up. It's a great insurance policy. Number 3 on their list, and this is the last one on their list, is changing legislation. According to them, to be honest, I haven't seen much change. It seems to be one of those things that's actually been pretty consistent for a while. However, according to the folks at BiggerPockets, the lease option world is changing, and it's severely unsettling right now as to where things are headed. Quote, most of the changes and uncertainty have come about because of passing of the SAFE Act and the Dodd-Frank legislation since the housing collapse several years ago. These reforms were enacted to prevent similar meltdown in our economy, but much of the language designed for big banks and huge corporations also seems to apply to small-time investors like you and me. No one is sure where things will end up or what actually applies to small investors, so the uncertainty also creates a degree of risk. Okay, so that's where they kind of come down on this. My point would be, you've got a contract that you've written out. You've really got 2 documents. You've got a deposit receipt / offer on the home. You have a lease with one little part of it that says, after X amount of time, if you don't exercise your option to purchase, if you don't exercise your option to use the offer that's attached to this, then it's all null and void, and everybody walks away with whatever they've got. And I have to think that an agreement like that is going to tend to trump a lot of these other concerns relating to legislation. Now, would legislation, if you sign a document and legislation comes later that would make that problematic, what's the scope of that? Again, I think we'd have to bring a lawyer on to figure that one out one way or the other. But so much of, I'm knock on wood, I've never had to go to court on any of the transactions I've done. I know agents who have, and it's almost like lightning, right? I've met a couple of agents where when I was told they had to go to court for something, I just nodded my head and said, yeah, okay, that makes a whole lot of sense. There have been more, though, who I know how they do business, and it stuns me when they end up having to go to court. And so much of that ends up being what the obvious original intent was between the parties. So with all of that spelled out as clearly as possible in a lease option that is accompanying an offer, I can't help but thinking that even if this went through some sort of a process, that you would end up still being able to wrap things up the way you want. It might be a longer road and more complicated. It could even end up that it makes more sense for you to walk away rather than take on a lot of those challenges. But honestly, I think we wander into worst case scenarios that I honestly don't think is really worth your time. Assuming that legislation is going to change that's going to screw you over, that is so out of your control. I think you need to proceed on what is right and able to be done today and proceed on that. I think the worst case scenario in a situation like that is you end up both being returned to your previous state, meaning whatever funds you have submitted to the seller that were designed to be put towards the purchase of the home, you get those back. You'd be returned to the state prior to the agreement. So at least that would be my guess. And again, not a lawyer, just a real estate broker. But it would seem that would be the most logical way to go. If for some weird reason it was determined that legislatively your agreement could not go forward. And I think that is a great academic conversation to have. I personally don't think that this is one that you need to worry about a whole lot. So changing legislation, absolutely no advice I can give you on that one. My advice is to plug ahead and do what you're going to do. And if laws get changed, there's nothing you can do about that. I simply would not make that something that makes you not do something. You can't make plans based on what some uncontrolled entity is or is not going to do. So number 2 was major repairs the owner can't cover. Smartest way to deal with that, get yourself a home warranty. They're a relatively inexpensive insurance policy and a great way to make sure that no one gets stuck holding the bill for a major component of the house. Next on our list was at number 1 was the due on sale clause. I think that's an absolutely good one to inform yourself on, find out what the details are, and then move forward in however you like. There is the, it may exist. It may be their side of the story. Then there is the, I have never ever in my life heard of the due on sale clause actually being exercised on a lease option. Does that mean it's never happened? No, it just means neither I nor anyone I know, including my grandfather who started in real estate in the late 40s, ever saw. So there you go. Because he was also a big fan of the lease option. And so there you go. All right, folks. I hope that's been some valuable nuggets of knowledge for you to repay you for your valuable time being spent listening to today's show. As always, thanks for listening. I'll talk to y'all next time.